Bitcoin and Ethereum are making new local highs as the bulls have taken over the crypto market. Some of us would say they never left. The charts are green across the board, and it's great to see some positive sentiment again. Not everyone is happy about crypto, though, as Gary Gensler is back at it asking for more money and authority to regulate the crypto markets. Exodus shares are about to trade on tZERO ATS, and then there's the biggest DeFi hack in history. A cool 600 million heist with an unexpected ending. Thanks for joining us, everyone. It's Friday the 13th, and we'll get down to the nitty-gritty in just a second on this week's Exodus Crypto News. As of today, Ethereum is up an impressive 80% from its recent lows, and Bitcoin is up 55%. These gains happened over the course of just a few weeks, which is truly incredible performance. And besides the two largest coins, the crypto market as a whole is doing quite well. Doge is up 38% in the last week, and Cardano is up 90% in the last 3 weeks. It's pretty crazy how fast the markets can reverse course from scary bear to euphoric bull in just a few weeks. This rally is especially interesting because of how much strength it's showing. The price rise was almost completely unaffected by the troublesome crypto regulations that are included in the latest US infrastructure bill. At this point, it looks like BTC is up on increased inflation fears as the market prices in all of the money that the central bank is going to print to pay for that infrastructure bill, and also the so-called human infrastructure bill that's up next. Ethereum also has a good reason to rip higher since EIP 1559 is live and more than 100 million worth of ETH has already been burned. If this rally continues, we should be looking at new all-time highs sometime in September or October at the latest. Did you remember to buy the dip? As you probably have already heard, a few months ago, Exodus had a Reg A Plus public offering and issued 2,733,229 shares and raised $75 million in gross proceeds. tZERO ATS reports that it will list Exodus Movement Inc. Class A common stock for secondary trading. Exodus issued securities under Reg A Plus, a securities exemption that allows the issuer to immediately trade shares on exchange or ATS. Commenting on the impending listing, JP Richardson, Exodus co-founder and CEO, said, "We're looking forward to trading the Exodus common shares on the tZERO ATS. Our investors will benefit from having access to liquidity through our partnership with tZERO, who we view as the leader in offering continuous trading for private assets. tZERO ATS is part of tZERO and is a broker-dealer created to trade digital securities." And mark my words, one day they're going to make a Hollywood movie about this next story. It goes something like this. A few days ago, someone exploited the Poly network, an Ethereum interoperability protocol, and made off with a cool $611 million. Now, for anyone keeping track, that is the largest DeFi hack in history. News spread fast and the response was immediate. The Poly network asked all of the largest exchanges to blacklist the stolen tokens so that the hacker couldn't liquidate them. On the stablecoin front, Tether acted fast and locked $33 million of stolen USDT. At this point, an anonymous crypto user told the hacker that his USDT was frozen, and the hacker responded by sending the tipster 13.37 ETH. The tipster, in what some have referred to as paying homage to the Dawn, sent $5,000 worth of ETH to Vitalik and kept the rest for themselves. Having created something of a Robin Hood image for himself, dozens of other people began to message the hacker asking for money. Others sent messages of congratulations as though stealing $600 million of crypto from Poly users was a great public service. So far, so good, but the story only gets better. A day after the hack, cybersecurity firm Slowmiss claimed to have identified the hacker's IP and email address. And while we can't verify that Slowmiss actually did so, it seems likely that the claim is true. Shortly after the announcement that the perpetrator had been identified, the hacker released a public message promising to return the funds. The hacker, quote, did it for the fun and is not very interested in money. True to his word, the hacker or hackers have at this point already returned almost all of the money apart from the frozen USDT. $500 million stolen and returned there and back again. The type of story that could only happen in crypto. And we're glad the hacker returned the money, and hopefully every DeFi protocol can learn from this exploit. Not every hacker is going to give the money back after all. A semi-familiar name in the crypto news is Gary Gensler, the head of the SEC. On the heels of the passing of the US infrastructure bill, has come out and asked for more power to regulate the crypto industry. According to Gensler, crypto investors are not adequately protected and they need the SEC to regulate the industry, especially the exchanges and everything that's happening in DeFi. Gensler also believes that existing laws are more than enough to rule over crypto, even though the Howey test, which is used to classify securities, was put on the books sometime between World War I and World War II. As we mentioned in last week's news roundup, it's unfortunate that Gensler is proving to be less innovative than some might have hoped. Look, there are definitely some cryptocurrencies that should be classified as securities. We get it. However, the problem is that there are even more coins that shouldn't be securities. What we really need is a new classification system, one that makes sense for the 21st century. Unfortunately, instead of embracing change and creating pro-innovation regulation, Gensler is content with the status quo. So all we can do is hope that one day, fingers crossed, we'll get some common sense regulators who understand crypto's potential and want to lay the groundwork for innovation and entrepreneurship. New technologies typically gain users on an S-curve. If you picture moving up from the bottom of an S, the slope goes this way up gradually until you hit the point to where it goes nearly straight up. As it applies to technology, whether it's Facebook or Bitcoin, usually growth starts off slow and then goes parabolic, almost out of nowhere. So right now we're reaching the beginning stages of that parabolic growth phase in crypto. According to on-chain metrics, Bitcoin added more than 1 million new users in July. Furthermore, Bitcoin analyst Willy Woo pointed out that these numbers don't even include new users on the exchanges. Woo estimates that this could account for another 3 million users who haven't taken custody of their own coins yet. This is the fastest that Bitcoin has grown ever. We've literally never seen new adoption happen this fast, and if you look at the price charts, a lot of these users came online even when it seemed like BTC was gearing up for a big drop to $20,000. So the moral of the story is that whether the markets are mooning or breaking down, Bitcoin adoption just keeps growing. We're gaining users at an unprecedented rate, and if the S-curve theory of adoption holds true, new user growth is only going to increase in the coming months and years. Well, thanks for watching, everyone, and make sure to hit those like and subscribe buttons, and until next time, hold on.